I'm going to bring in Phil Rosen, co-founder of Opening Bell Daily. Phil, great to have you.
Thank you for having me.
Yes, and look, S&P up 7 of the past 8 sessions. It seems like seasonality is on the market side.
Things are looking extremely good going into the new year. And there's a few reasons for this that, at least the ones I'm watching. We have the Santa rally, which is going to be about a 1.3% gain dating back to 1950 on average. So if you annualize that, that's a 70% gain per year. So that's a very strong 7-day trading session or trading sesh. And on top of that, we're probably going to get a Fed rate cut next week, which markets know that. And when the Fed's cutting without a recession, stocks are up 100% of the time 12 months later. And when the Fed is cutting with stocks within 2% of a record high, stocks are also up 100% of the time 12 months later. So those are a few things that I'm watching. And other than that, there's a lot of broader macro tailwinds that should be setting up for a pretty good year ahead.
Yeah, so I think you're with the market, right? 89% of market participants anticipating that rate cut next week and actually bumping up expectations for 2026 with a new Fed chair set to take hold. Is there anything in particular, Phil, that you'll be watching or listening to when the Fed chair, Jerome Powell, delivers his remarks after the decision next week?
Yeah, I think the main thing will be if we get a cut, whether it's a hawkish cut or a dovish cut. So by that, we're going to look for what Powell is signaling for the months ahead. If Powell says, all right, we're going to cut, and then we're going to have a few more cuts later, then markets are going to love that because that's just very good for asset prices when interest rates come down. But if Powell comes out and says, we're going to cut today and then pause or hold for a while, that could maybe spark a sell-off because markets will want to see some sort of extra dovishness. But if Powell says, whoa, let's hold on a sec and let's keep interest rates here, then we may not see the rally that a lot of markets are expecting right now.
You know, AI has been a central theme for years now, but certainly back in the forefront this year and of late, especially as it relates to valuations. What are you watching in the AI space?
I think a lot of the chatter around whether AI is a bubble or not, I think it's pretty overblown. I think there's more of a bubble in bubble talk rather than actual valuations or the AI trade. If you look at these major companies like NVIDIA and Microsoft, their PE ratios are a third or a quarter of what we saw in 2000. So that's one way to assess the situation. And then also the size of these companies and the cash flows and the balance sheets are so big. We've never seen anything like them in history. So I think it's pretty intellectually lazy to compare it to the dot-com bubble. So to me, when I hear chatter like that, I don't dismiss it right away, but I very much take it with a grain of salt because I don't think there's that much weight to put into those things.
And so you referenced Kevin Hassett earlier, right? And I think as we enter 2026, certainly that will be a major theme probably pretty quickly off the bat in terms of who this next Fed chair would be. And, you know, by most reports, the expectation, as you said, Phil, is Kevin Hassett. What does that do to rate expectations?
If Kevin Hassett's the next Fed chair, rates will come down faster than markets think, is what I expect. And he is the front runner. But even if it's not Kevin Hassett, the other front runners, the other Fed governors that are in the running that would be Trump's pick for Fed chair, they will also compress interest rates to zero. So whoever it is, rates are coming down, asset prices are probably going to go up. But the thing that I'll be watching for Kevin Hassett, he has ties to Coinbase. He reportedly still holds stock in Coinbase in the 7-figure range. And we've never seen the most powerful monetary policy institution in the world run by someone with crypto ties and who is a Bitcoin bull. So what's interesting here is that if he still owns Bitcoin, let's say, and maintains his holding in Coinbase, he is going to be intimately aware of the currency debasement situation that's been happening for decades, but he will be controlling the price of capital. So that is the dynamic that I haven't seen that many people talk about, and I don't really know how he might behave as a policymaker, but we do know that he is very aware of the currency debasement situation because of his ties to Coinbase and because of his assumed holdings in Bitcoin. So that is very interesting to me.
And we've seen the price of these risk-on crypto assets come down of late, but as the market has recovered this week, Bitcoin has recovered as well. What's your view on the outlook for those?
I don't think the structural bull case for Bitcoin has changed. Even, we have a 4 or 5% dip on a given day. I think that's fine. I think the headlines will make more of that than what it actually is. And a lot of Bitcoin holders who've been in it for years, they've gone through 50% drawdowns, 70% drawdowns. So when we see a 4% drawdown, it doesn't really register to a lot of Bitcoin investors, I think. And of course, if you saw that in the S&P 500, it's a huge deal because those are businesses that are either spooked in some way or the narrative's changing in the broader market where earnings are down. But with Bitcoin, the volatility is a feature, not a bug of the asset. So a lot of the long-term holders, they're looking for these drawdowns and they're looking for the volatility because in one way that keeps out a lot of people from the asset. So in that argument, it would be it's still early on Bitcoin because the volatility is still high.
We talk about Bitcoin so much, right, when we talk about crypto, but anything else in that space that has your eye?
You know, I think Bitcoin is really the king of crypto, and I don't pay too much attention to what other cryptocurrencies are doing. ETH is pretty interesting. I think that's had a great year, and it's probably going to continue to do pretty well. But Bitcoin is really the one crypto asset I watch, and I think it's such a great macro indicator, and it's a very good signal of the risk appetite in the market because of that volatility, right? So if you have higher risk appetite, people are going to pile into Bitcoin. But right now, you have some jitters in the market. People are a little scared of getting into these assets, so it's going to dip a bit. So that's really what I'm watching for now.
Phil Rosen, co-founder of Opening Bell Daily, joining me here in the studio. Phil, thank you so much.
Thanks for having me.
Great to have you.